Hopefully you guys are hearing me now. We had a glitch at the start of the show, but I think we're set now. It is the 19th of July, 2021. You know what's going on. Market's down big. The Dow's down 900 points. The S&P 500 is down 88, 88 points. NASDAQ's down 197. We are near the lows of the day in all of the indices. And we're going to let you know what's going on in unusual activity, and then a little extra, what's behind some of the activity that you might not otherwise hear about. So let's get started. Our disclaimer says that this is for educational and informational purposes only, and that you need to understand that all investments involve risk. Also, we have intellectual property rights that are included but not limited to registered marks, trademarks, patents, and copyrights. Please feel free to share this with all of your friends, but don't use it in a commercial venue without asking us first. Thank you. If you're feeling a little deja vu, I thought you might get a kick out of this from Pinterest, that she's having amnesia and deja vu at the same time because she thinks she's been here before, but she's forgotten. So anyway, I'll show you somebody else who's kind of looking like he wishes he'd forgotten about this, and that's the judge, because that was the one that CNBC tweeted out today for unusual activity with Pete, and the judge looks like he's just had just about enough of that sell-off moments ago. Can't blame him there. Let's take a look at VIX. Why? Because 50 Cent seems to be back. You guys know about 50 Cent, whether it's a man or a woman, we don't know. But there has been a player in the markets for decades now that traders on the floor always referred to as 50 Cent. Why 50 Cent? Was it because he was a rapper? No. It was because he would buy, or she would buy, VIX options that were out of the money, pretty substantially out of the money, and would generally buy a ton of them, hundreds of thousands of them, more or less in the range of about 50 cents. And so that moniker stuck. And today I'm showing you a screenshot of the July 25 calls. Notice the expiration. 21 in front of July 21 means that the expiration is the 21st of July, because, as you might already know if you trade VIX options at all, they do not expire on Friday like every other option virtually that trades. Instead, the VIX options expire on Wednesday. So and they did that, folks, so that they could try to decouple some of the volatility that otherwise might be introduced from having stock, options, futures, and VIX all expire on the same day. Might mean that people have to scramble rather dramatically to hedge themselves if they wait till the last minute to do that. And so Wednesday expirations were born. And as you see here, this particular trader steps in and buys a lot of these 25 calls that expire this week. These calls, 20,000 and then 9,500 and 9,500 and 7,500, you get the idea, paying between 65 cents on the low up to 85, 90 cents. There are more trades, a total of about 145,000 of these went off. I'm just showing you 4 of the biggest trades that happened there. And again, that's options that expire on the volatility index for the S&P 500, and they expire this Wednesday. Take a look at this also, because last week, Thursday, when I was on the halftime report, I said, look, at that time, the TLT was 147 and they were buying a ton of upside calls. And I said, this looks like somebody's betting that rates go considerably lower, because of course, as the TLT goes up, that means the yields or rates are going down. That's what the big bet was last week. Now you see that there's a big bet, another 10,000 of these out in September. Last week, they were buying the 150s, folks. And you may have heard me say that on the halftime report, again, Thursday last week. This week, today, they're buying the 157 calls. So they're betting it goes considerably higher than where they were betting last week, which means that if they're right, we're not seeing 121 as the low on the yield here. We're seeing the yield push considerably lower, which is kind of opposite of what a lot of the prognosticators had been saying, because obviously, if you're seeing inflation pop up everywhere, and you are, then you'd figure the Fed's going to have to hit it, but that's not the bet right now. So keep an eye on this. TLT is that big trade again that we talked about last week. All right, let's get into today's unusual activity, 3 at 3. We've also got questions. If you're somebody that's tuning in for the first time, we've got questions at the end that you guys have posed to me. Suncor, SU is the symbol. Stock was about $19.60, and they were buying big upside calls. How big? Well, 10,000, because 10,000 on the call side means that somebody's betting on 1 million share equivalent, because you throw 2 more zeros on the end of that 10,000, you get 1 million shares that they could control. The stock is still about at the same spot. It's moved up by 20 cents since we noted this, that they're buying in the money September 19 calls with the stock at 1960. So even with today's 6%, 7% sell-off, they've jumped back in betting on higher crude oil prices, because that's, of course, what Suncor does up in Canada. There is a copy of the graph for July, pretty ugly, as you see there, because it was moving down from $25 a share for Suncor Energy all the way down to the lows of today. And now it's $19.81 as of right now. And you see the range on the day, it's been $20.27 all the way down to $19.56. Pretty wide range for a energy stock. So a lot of big bets being placed today that the sell-off in Suncor is over. We'll see, but that's a nice way to play it with an upside call that's in the money. It's going to trade an awful lot like stock without the same downside risk. There's Pete talking about FLR. Our second on today's 3 at 3 is FLR, FLR. Big consultancy and engineering company. Stock, one of the few stocks in the green. FLR today was, when we saw it, moving from basically, as you'll see here, $14.72. That's when we alerted our subscribers this morning, to now moving to $15.33 right now, still in the green. So 11,000 of these calls means 1.1 million share equivalent. They paid about $1.45 for these 1750 calls, way out in January though. So this is a longer term bet out to January. Maybe it's a bet on some infrastructure, because clearly FLR will be involved on that. There will be some sort of infrastructure bill, we think. We just don't know how big. We suspect it'll be a lot smaller than the president wanted. But this is a play all the way out: August, September, October, November, December, January, 6 months into the future. Bang, that's FLR. And there's a graph that shows you a somewhat similar to SunPower, where topped out at 25, but in this case, that was back in May, not just in July. And there you see FLR moving over the last several months to the downside. Third and final of our 3 at 3 is FEYE. Pete talked about the August 21 calls. He intends to hold these for about a month. So do I. I also had massive amounts of liquidation on Friday, not because I'm smart, not because I saw 900-point sell-off coming, just the opposite. But it's one of the nice things about options, folks, is that when I write calls against calls that I own, if both those calls are in the money, the position disappears on expiration day. It gets called away. Similarly, if you had a put and you sold a put against it, and the market moved through that lower strike, your puts would disappear as well. It just goes to cash. And that's what happened to about 40% of my portfolio this past Friday. I knew it would happen, didn't know anything about the sell-off today, and not all of it was profitable, just a bunch of calls written against calls that I had that were in the money. I just, use that as a way to exit and squeeze a little more time premium and upside out of the position. There is FEYE. $19.64 was when we saw it and posted it up for our subscribers. Symbol, of course, is FEYE. And Pete talked about those August 21 calls. Of course, those would be out of the money when it was 1964. Right now, as of this moment, live, it's 1994. It's up 30 cents since we posted this. And they bought 10,000. That's once again a 1 million share equivalent, because every option is for 100 shares of stock. They paid about 50 cents for that upside bet in FEYE. And here is the chart for FEYE. There you see a gap that if we could move into that gap, basically we are in that gap right now. If we can trade to the upside of that gap, we hit at least 22 on this move, which would be a nice windfall for the position that we have on right now. As you guys know, if you're a longtime viewer, I don't buy out of the money calls. I buy at the money calls or just in the money calls and sell upside calls. I do that 1-to-1. I don't do ratio spreads. I do that 1-to-1. So I have no additional upside risk, but I've addressed time decay and I've also addressed volatility compression, because vol is high right now, which I will get to in the Q&A section. All right, one of our only ads today is for our own webinar. I will be on with Ryan Mastro. He is our chief option strategist at Market Rebellion. Wednesday, free webinar. You can go there and sign up on our site. If you go to marketrebellion.com, you'll see exactly where. We kick it off right at the market close on Wednesday, 4 p.m. Eastern Time. We'll be talking about unusual option activity and how we use it to trade earnings. So if you want to see that for free, you got to register. Register at marketrebellion.com. All right, questions? You know you can always send us questions. My Twitter account is at JONNAJARIAN, and I will be happy to answer your questions. SABR, all right, good question. New Jersey stud, and his or her handle, I believe it's a he, says is at New Jersey stud 02. SABR Corporation, been dropping since late April. I would think heading into travel season and with more vaccinations that it would be a hot play in tech and travel. What is the impetus for the drop in price? Well, we priced in the reopening trade for SABR when it was 1060, 1070 back in January. We saw unusual activity. It moved all the way to what, 17 or so, and then it's bled all the way back down to where it was at the beginning of the year. Why? People got ahead of themselves with virtually every reopening play. Doesn't matter if it was Live Nation, my friend Josh Brown in Live Nation, and I agree with him, or CCL, Carnival Cruise Lines, or Norwegian Cruise Lines, or American, or United, or JetBlue, or Marriott. It doesn't matter, folks. Beginning of the year, it was hot, 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 and we were sure with the vaccinations that we were going to reopen, right? We are still reopening, but the world isn't reopened. So some of the most profitable routes for many of those travel stocks are not available to them right now. Just check out sometime what it costs to go from New York to LA, same distance as going from New York to London, really. And it's a lot more profitable for that airline to fly you overseas than it is to go New York to LA, but the corridor is not really open. So anyway, you get the idea. SABR is, of course, software that runs a lot of these travel sites that you and I use all the time. That's why New Jersey stud, that we're not seeing that move to the upside lately. We've instead bled off from, like you said, middle of March all the way till now. Is it a good bet going forward? Probably so, but you and I don't know for sure when the rest of the world's going to be reopening. They're all faced with the same thing that we're worried about, the Tokyo Olympics, and vaccinations in parts of the world where they don't have nearly as large a population that is vaccinated as we have. There's lots of reasons. Anyway, thanks for that question. Let's get to this one. Is the sell-off over yet? Asking for a friend. No. But is it a good opportunity? Yes. So we never know for sure that this is the time to buy. What I look for is capitulation and options. I've already described that a little bit for you guys, and that's one of the things that I wanted to cover today. Is if you look at the VIX today is at or near the highs of the day, roughly 2450. We were 10 full points lower than this beginning of July. July 2nd, which was leading into the July 4th holiday weekend, we were at 1425 for the VIX. Now we're at 2450, been as high as 2492 today. So what does that mean? That's a 74% jump. So, I mean, in simple terms, folks, what I do is when vol gets high, I want to be a buyer of stocks because, like Warren Buffett always says, buy when there's blood in the streets. So I'm a buyer of stocks and I'm a seller of calls. My hands are out, I'm a seller of calls. I'm not buying calls here unless I do those one-to-one spreads. Why? Because the odds have moved against me. 74% more expensive today than it was July 2nd. July 2nd is only 17 days ago, a little over 2 weeks, and we've moved up 74%. So I would ask you, would you go if you went to a Home Depot right now and they said the washer's 74% more today than it was 2 weeks ago? No, you wouldn't. You'd say, I'm going to hold off. I'm going to wait. Well, what I also do instead of just waiting is I either sell puts as a way to recognize that higher premium, but that's not for everybody, or I buy stock and sell calls. Now that is also a synthetic put, folks, because long stock short call is what we know as a synthetic put option. And you are short that synthetic put, just like if you sold it naked. But what I like is taking advantage of high vol, which means I have to be an option seller to take advantage of that. Does it mean that I know that we're not going higher than 25 for the VIX? No, I'm just saying I'm scaling in with these sorts of positions. So after a 74% jump, that means if I'd like to sell calls against my Apple, I'm getting rewarded more for selling those calls now. So what is it like? I like to say it's like you have a house near the Super Bowl and it's Super Bowl week, and you know you can rent that house for a lot more money now than you could during normal times. Same thing, I like to use that. Davos. Davos, it used to cost, or I imagine still does, about $200 or $300 a night to get a nice room in Davos. But if you want to go during the World Economic Forum, WEF, that same room could cost you $1,800, $2,000 a night. Check it out. That's what it is. So would you like to be an owner of that apartment and a seller of that room at $2,000 a night? You bet. That's what I like to do. That's one of the favorite ways that I like to play the markets. So rather than just watching and saying, like many have said on CNBC, well, yeah, I said buy the dip, but now it looks like we're going lower. So pick a level then. If you think we're going lower, like another 50 points in the S&P, you could sell a put at that level. So in other words, you're never just hamstrung and sitting out. You're taking advantage of what the market's giving you. That's what I try to do every day. All right. So is it over yet? No, but we might be close. XIO, and that's close in the short term. XIO, whose handle is @chip_shortage. Do you see the smart money around CLF? No. Haven't seen smart money around CLF since late May. So do I believe in it still? Yes, I do. CLF is also the former Cleveland Cliffs folks. It's down 4% today. It's trading 19. It was one of the many stocks, luckily, that was called out for me on Friday. So no, I do not see upside call speculation or smart money in CLF for quite a while. And this one, sorry, it's a little, a little blurry, but Main Street is watching, said, given volatility in this market, is it better to own stocks rather than losing everything if options expire out of the money? Well, most things are better than owning options that expire out of the money. But if I buy stocks here, as I just explained, I will sell, not buy, sell upside calls against it. Because again, I'm getting approximately 74% more premium now than I was getting just days ago. So I like my odds in that trade. Thank you for joining me today, folks. Always a pleasure. If you'd like to check out all of our offerings, go to marketrebellion.com/get started. There you can see about learning about stocks, options, calls, futures, all of that at marketrebellion.com/get started. We've got coaches, mentors, we've got free webinars, we've got a ton, over 2,000 videos. Make sure you check out marketrebellion.com/get started. And I'll see you tomorrow, our 60-second video, and then the halftime report. Don't forget, by the way, to sign up for that free webinar on Wednesday after the close. See you then.